you?
I am well. How are you today?
Doing good. Thank you so much for being a part.
I'm looking forward to it.
Yes, sir. And I believe it is noon, so we are going to start because I believe in being aware of your time and mine. I'd like to welcome everyone to our bi-monthly home buying seminar. We do have at least one realtor on that I can see, but I can't see everybody. So I'd like to welcome any home buyers, our repeat home buyers, and also any realtor partners that are joining us on today. And I ask that you please have freedom in your unmuting, asking questions, putting or your suggestions or comments into the chat as well. Those are welcomed. So please go ahead and just be at liberty to be yourself and ask any of the questions that you have. So we wanted to focus on a couple of key things on today instead of just a general home buying session. We wanted to talk about budgeting, your credit score, and also a saving for a home purchase. So before we go too far, I'd like to ask if anyone would like to share something that's holding them back from buying a home. One thing that's holding them back if you have not already purchased. Anybody want to share?
I will. This is Miss Beeler. I will share.
Yes, ma'am.
So for me personally, it's just not I'm gonna say the funds because I don't have much saved. Currently, I am a single mother. So I'm gonna say funds, and then the knowledge of not knowing what actually is needed when it comes to not having funds and what all it will take in order to move forward within the process. So I'm stuck there because of the fear, and I try to pray myself way through it, but I'm just still stuck in that same spot.
Mm.
It takes a lot of courage to share
I
that.
have get ready for another meeting.
Okay.
Just look for now. I'm just gonna send jobs to you that match what you've done in the past, and you let me know whether you're interested in them or not. Oops.
Okay, y'all. Please forgive Miss Nettles. She's amazing. She attends every couple of months with us. So I'm excited for her to share in because she's worked with us for quite some time. So it sounds like she's on a work meeting though. Importance of preparing for home ownership. So the key points, financial stability is crucial for securing a mortgage. Proper
Right.
preparation can lead to better mortgage terms. And then avoid common pitfalls to ensure you have a smooth home buying process. So one of the things I like to share with my clients is that buying a home and securing a mortgage is all about risk. So it's all about risk. How much risk are you bringing to the bank? And our job is to help lower the amount of risk you're bringing to the bank because they don't want to give money to people that they don't think that's going to pay them back. So that's what it's all about is building a mortgage that makes sense to the underwriter, to the bank so that you can get into a home. So we're going to talk about budgeting first, mastering the art of budgeting. Do any of you currently budget on a monthly basis? And we'll just leave that kind of where it is. Some of us do budget on a monthly basis, some of us don't. So one of the things you can do is go back and collect 3-month bank statements. So that's one of the first things I'd like for you to write down. Gather 3 months bank statements. If you use a credit card for expenses throughout the month, or if you use Cash App and things of that sort, get 3 months of all of those things so you can see where you are currently spending money. So that's how you're going to assess your current financial situation. And you're going to be able to look at that 3 months to average what your utilities are, average what your eating out is, average what your cell phone bill is. That's how you're going to start to look at your budget to determine if you're overspending. Where are you wasting money? Where can you reel things back in? Creating a realistic budget is important. I would encourage you that if you have a significant other, make it a family event. Husband, wife, husband, partner, whatever is going on, let's make it a family event. If you have children that are teens, high school, college, bring them in on it as well. It's never too early to start learning about budgeting. So prioritize your debt repayment. If you have credit cards or loans, personal loans, furniture bills, you want to prioritize paying your debts down. You want to get rid of things that have high interest. But if you are looking at getting a home loan, it may make more sense for you to get rid of debt that have a high payment. Because when we're getting you ready for a home, debt to income is important. So let's say that you purchased a mattress. We're going to say you purchased a mattress and you're repaying that mattress over 12 months and the payment is $300 a month or whatnot. It may make more sense to apply a heavy amount to that $300 payment versus your small credit card payment of $30 a month if you're trying to get a mortgage, because we want to get rid of high payments. Now, overall, it makes sense to apply to high interest items, so therefore you are paying less interest over time. How many of you know that when you are financing something, your interest is applied only to the balance of that item? So every time you pay money on the principal, or let's say if it's a credit card and you're paying extra to pay it down quickly, you're only paying interest on the balance that you have left. So the same thing when you do become a homeowner, over time, less and less of your money go towards the actual interest of the loan and more of it goes toward the principal because you're effectively paying less every month, less on that balance. So some of the great tools that you can use, you can find online. Mint, I believe they have an application for that. And then YNAB, which is you need a budget. Now, some of y'all probably were raised with a grandmother like me. And my grandmother had a tablet. It was just a narrow room tablet. And you could flip through that tablet. And grandma worked part-time. Grandma cared for the family. But grandma was the accountant in the house. And she wrote the bills down every month, what they were and what she applied to it. So you do whatever method works for you and your family. If it's just a notebook from the dollar store, use that notebook. If you would like a copy of our budget sheet, we can send you that budget sheet. But if you don't know where your money is going, it will go out the window and you don't know how much you can actually save. Anybody know roughly the percentage of your gross income that should go towards your housing? Anybody know the answers to that? Or an idea amount?
Is it 30%?
Yes, hi Courtney.
Hey, how are you?
I'm doing good, sweetheart. So for most households, and when you talk to, financial experts, the guideline is around 30% of your income to go towards your housing. Can we get you a mortgage using more? We can. But just for safety and security, 30% of your gross income is generally allocated towards your home payment. So thank you so much for sharing that, Courtney. Steps for creating a budget. So you want to calculate your monthly income. You want to look at those incomes that you can count on. Let's say you're on a salary, but you have some bonuses, or you might have some overtime. You want to try to budget off of your salary, off of your 40-hour work week. If you have some part-time income, if you realistically work part-time all the time, every year, always, but if it's seasonal, if it's here and there, you don't want to create your base budget based on those overtimes, those commissions, and things of that sort. Now, let's say you're a salesperson like me. I'm in mortgage, so I don't get paid if people don't buy homes. Ms. Phaedra's in real estate. She doesn't get paid if people don't buy homes. So for people like us, we have to look at our income over, let's say, maybe 6 months, and then average out what we generally have, and then give ourselves kind of portions or salaries based on that. So that would be my advice to you. If you are in any type of commission-based business, go on kind of what your lower expected commission might be to base your budget on. Look over your fixed expenses. If you have rent, if you have home, or not home insurance, I'm sorry, sometimes home insurance, but more than likely your renter's insurance or car insurance. If you have any loans, any fixed expenses, And then remember, if you pull out that 3 months bank statements, you're gonna be able to see what you're spending on groceries, entertainment. Anyone have any of those buy now, pay later? I call them new layaway, except you get to take the stuff home now. I'm like really telling my age, it's not good at all. But if you have that buy it now, pay for it later, those things you need to look at in your budget. And I want to ask you that if you do have those, try to wean yourself from that. If you want to buy a home, pay those things off and wean yourself from it because they actually count in your debt to income ratio. So when we get your bank statement to check your assets, we have to look for those incidental payments you're making on those things that you possibly could have waited for. So every time you look to buy something, I'm a living witness. I have apps of clothing stores all on my phone, and you can open all of them and it'll show you stuff in the cart. And that's exactly where it's gonna stay, in the cart. Because I do enjoy looking and adding, but I don't enjoy paying for it. So it's in the cart, unless it's something I really need. So for your emergency fund, if you have a salaried position or something that you can look for every 2 weeks, you want to have about 3 months of your main fixed items in your emergency fund. If you are, like me, commissioned, if you are in sales of any sort, you want to have about 6 months of your living expenses in the bank. That would be ideal. Now, some people desire to have more because they don't have anyone they could possibly reach out to if an emergency happened. So at the end of the day, it's whatever makes you feel more secure. Now, as you're looking to purchase a home, having your down payment for your house is important too. So let's say you've created this emergency fund, but you're like, but I really want to buy a house. Then at that point, if you make the determination to buy the house, use some of your emergency fund, you just need to have an aggressive way to put that money back into your emergency fund, okay? Adjusting and monitoring your budget. So that's where you're gonna be sitting down, hopefully every month, looking at your budget, looking at what you spent, looking at what you saved, looking at possible, mistakes or misjudgments that you made. Oh, I probably shouldn't have bought that, but you know what? Next time I won't get it because I already have 3 pair of black shoes, so I won't get those other ones. Those type of things. So get on to yourself, but then forgive yourself and move on to the next month. All right, so skyrocketing your credit score. Can anyone share with me what the minimum credit score is to get an FHA loan with only 3.5% down? What is the minimum credit score to get an FHA loan with 3.5% down? Anybody know?
640.
Hi, Miss Jermans, how are you doing?
I'm good.
Excellent, excellent.
Is it 580?
It is 580. It is 580. So thank y'all so very much. So your credit score, it does matter. So if you want that traditional lower down payment of 3.5%, 580 is the minimum credit score. Now, the different programs you add, for instance, if you need down payment assistance, if you're in Arkansas, you need a 640. If you're in Texas, you need a 620. So there are other reasons that you could need a higher score, and it depends on each of your situations. So here's something to look at for your credit score. You have a FICO score and you have a Vantage score. So when you're looking at Credit Karma or you're looking at some of your credit cards will give you an idea of what your score is. And those credit scores are not your true lending model. So when you're looking at buying a car, buying a home, those institutions are using different models because they're assessing you at a stricter level. So they're going to look at the things you've done on your credit and judge you a little bit tougher than just the consumer-based model. That consumer-based model is meant to help you see any inconsistencies that you need to dispute or need to reach out about. So they're to help you keep an eye on your credit, make sure no one's borrowing your information. But when you go to get a home, they're looking at you a little bit in a stricter fashion. So again, this is all about building a program to help lower the risk that you bring to the bank. You don't have to be perfect We just have to wrap it up well and present your situation properly. Checking your credit report. So you can get free credit reports online, of course. One of the websites I like to share with you if you want to keep up with your mortgage report is myfico.com. So if you want to keep up with your mortgage credit score, you want to get myfico.com. There is a cost involved in that. So if you're still doing some things to work on your credit, or if I've given you guidance and you're like, I'm still working on this stuff, then don't go purchase myfico.com, because you know you still got 5 things to work on. But as we get closer and you want to purchase it to kind of see where you are, go ahead. Or you can just reach out to us. We will do an updated soft credit check for you. Doesn't hurt your credit at all, and it's no cost. So we can always check your credit for you every couple of months to see how your progress is coming along. But one of the things when you get your credit report, let's say you use Credit Karma or you use Experian.com, you want to look at errors and dispute any inconsistencies that you see. So disputing things that are incorrect, it should come off. If you dispute things that are correct, it's going to be a harder chance of it coming off. But if something is really wrong, like your name is a junior and your dad was senior, and you know this, or you have a common name and something hopped on your credit report that's not yours, or your address is wrong, you can dispute those things and try to get those fixed. Paying your bills on time, so important. Anybody ever had a late payment on their credit? 30-day late? Anybody? Nobody. Okay, nobody. All right. So if you have ever had a 30-day late on a credit card, a car is like the big one. Oh my goodness. Try your best to avoid a late payment on your bills, because it drops your credit significantly. And sometimes we don't even realize how close we are to just making that $30 or $40 payment. It's as simple as not going to Chick-fil-A. It's as simple as not going to Chipotle. Y'all, I got to tell y'all the Chipotle story, but I'm not going to do it right now. But it's as simple as avoiding one of those places and taking some meat out the freezer or some lunch meat or whatever and making that meal that day. Then you have your $30 or $40 minimum payment to avoid that 50-point loss you're going to have on your credit score. That's just how important it is. So do whatever you have to do to make that credit card payment, that car note. Plan ahead. Plan ahead, put it on automatic. If you don't trust yourself, or you're just so busy that you might forget, put every bill you can on automatic. I don't think you can do utilities automatic at this time, but I have mine set up on my bank. So soon as I get that utility bill, I plug that number in. Boom, send. Next utility bill, boom, send. Everything else is on automatic. Those are the only 2 bills I put in, water and electric. That's it. Outside of my tithes and offering, those are the only 2 other bills I plug in on a monthly basis. Everything else is automatic. And therefore, you do not have a chance, you know, if the Lord says the same, you don't have a chance of being late on anything unless there's a technical issue going on. Reducing your debt. So pay down your credit card balances. Do not open new lines of credit unless it's something that we've discussed and something that I've advised you to do. So don't open new lines of credit, because when you do, it's going to ding your credit. But let's say you open up a new, I'm going to use the mattress again for an example, because that's something that we recently actually purchased. So if you go and you purchase a mattress and that mattress was $2,000, now you owe Mattress Firm $2,000. So you now owe them 100% of the credit they gave you. Risky or not risky? Anybody? They gave you
Risky?
$2,000. You owe them $2,000. Is it risky or not risky?
Risky?
Risky. Yes, it's
Definitely
risky.
risky.
Exactly. So you owe them 100% of the pie. They have a harder time getting that back. Now, as you start to make payments, it's like, oh, okay, they gonna do what they said. Okay. Your credit score starts to do something different. So that's why when you go out, and I'm gonna use a car because we can all relate to a car. When you go get a car and they run your credit 355 times, you got that hit, but then you bought this $35,000 car, you owe them $35,000. Now, as you start to make your payment and your balance goes down, that's when it starts to help your credit. But don't let anybody ever tell you that buying a car is going to fix your credit. That's not true. Not true at all. Whenever you start at 100% of anything, as you pay it down, it's going to help you. But when you initially open it, it's not going to help you. Now, credit card is different unless you get a credit card that already comes with some kind of fees and all of that, which sometimes can happen because of the situation we're in. So we have to give ourselves grace. But if we open a credit card and let's say they gave us a $1,000 limit, ideally we want to keep that usage under 30%. That's $300. So it's better to have 2 or 3 credit cards than to max out 1 credit card. All right. So it's better to have 2 or 3, especially if they're really small limits, than to max out 1 credit card. Now, here's another tip that you can use is if you have a credit card, you've had it, let's say 12 months, 18 months, you've been good with the card, you make your payments on time. Another good way to kind of make that space is to call them and say, hey, you know what? I've been good with y'all for 18 months. Is it possible that you could increase my limit? So then if they increase your limit and you still owe them the same, you just created some more space. Your utilization is opened up, so your credit score should go up some. So that's just another quick tip that you can use. So we talked about maintaining a low credit utilization and having different types of credit. So let's talk about that real quick. Some of us already have a car loan because, you know, we just came with one. We can't get rid of them. But if you don't have a car, don't get a car. But if you do have a car and you're paying your car note on time, it does give you more points than like a credit card or something like that. Because again, it's just a heavier weighted item. The same thing as when you have a home. When you have a home loan, your credit score is going to go up if you pay your home loan on time because it's such a heavy weighted item. So little credit cards and installment loans, they aren't as weighted. So they're not going to give you the type of growth as once you get into, I'm going to call it maturity, right? So along our life, we're maturing in different areas. So once we get into maturity of home ownership, we start getting into the 7s and the 8s, and that's where we live at. Like, this is where we at. We right here. We up here at the 800s. We're not coming down. It'll take something real big to bring your score down once you're in that high 7s and 8s. So if you stay consistent, it's like working out, it's like reading your Bible, it's like all of those things. If we stay consistent with our practices, we will stay in the place that we got to. We will stay there if we just maintain and stay consistent. Anybody have any questions at this time?
No, I was just gonna add, another thing. I think it's about learning to have a better relationship with money. It took me a while to get there, but you just gotta have like now I'm to the point where I know when to cut myself off from things. So just learning to get a better relationship with money.
So good, so good. I love it. Thank you for sharing that. Actions to improve your credit score. So we talked about a couple of these things, paying your balances down, limiting your hard inquiries. I think most of you already understand that, but try not to let people just pull your credit for no reason, just for a discount or something of that sort. If you're looking to do something like buying a home. Now, if you're not in the process of doing anything for yourself or using your credit anytime soon, then go for it. Save your 30% at pennies or whatnot. But if you're looking to do something greater, don't worry about saving 30%. Actually, think about what you got in your cart and go ahead on and put it back if you don't need it. All right. Keeping old accounts open. I have an American Express story to tell y'all, but I'm not going to tell y'all. Just know I have all these stories. Keep your old accounts open. So my longest account I have had since I was 18. So almost 30 years have I had my credit card open. So I will always keep that card open. Something will be on it every month. Netflix or something will stay on that card. It will never close because it's the oldest account that I have. So that's important. So don't open and close and open and close. Get you a couple that you keep open regardless of the rates and all those kinds of things. Just as you get better with that creditor, call and ask them for reductions. Hey, I've been with y'all for 2 years. I pay my bill on time. How about lowering my rate on this card? How about removing my annual fee? I'm a veteran. How about removing my annual fee? I know we have a veteran on here for sure. So there are some things that they will do for you. I'm a senior citizen. Please remove my annual fee. So look at the different things that you have, and it doesn't hurt to ask because a lot of them will do those things for you. Using a secured credit card. So that's an easy way to get credit established if you have a less than perfect credit situation. It's actually borrowing from yourself, and that's what a secured credit card is. So we have to start where we are until we get where we want to go. Saving, let's talk about it. Anybody have any ideas or tips they have for saving that they want to share? How much of
Well,
your
I know what,
go
I
ahead.
know what I do is I have a Christmas club savings account where it automatically pulls $50 from each check before I see it. And at the end of the year, I'll have, $1,500 that I didn't even know I missed throughout the year.
Awesome. Thank you so much, Ashley, for joining. It's great to see you on. So she just said Christmas and it sparked something in my head. And I'm gonna go to Christmas real quick and then I'm gonna come back. I had this young lady, she had bought a house. She called me, she was like, Miss Tomekia, I'm in trouble. I bought Christmas for everybody. She has no husband and no children. So one of the best ways that you can start your savings is to say no. That's the best. Say no, no. And you don't have to explain anything. If you can't afford it or you can't do it, just say no, not at this time, and move on. Because you have other goals in sight. And sometimes when you're living a certain way and trying to get to a certain thing, you're like 10% of people. 90% of people are not trying to do what you're doing. They're not. So your answers and responses and ability to do certain things are not going to be the same. You're going to be okay wearing the same outfit and not going to get your nails done every week. Like you're going to be okay with that because you're trying to live a little different than what the world is making you think you want to live like. It's going to be different. It's going to feel different. It's going to look different. But be okay with saying, no, sweetheart, not at this time. And then that's going to be one way. But just like Ashley stated, putting money away out of your check before you see it is a great tip. One of the things that I used to do is I'd start with my whole check right here and over here on this bank account. And then I give myself this amount here every month because you got that monthly budget planned out. And this is because I was commissioned, right? So all my adult life, I've really been commissioned my whole adult life. So whatever that check was went into this account, and then I paid myself this amount for my budget over here. Now I couldn't go back over here. I couldn't go back over here. I had to stay right over here. So if you start disciplining yourself to stay within your budget, if you put all y'all's deposits into X account, I'm saying all because some of us married and different things on here. If all your deposits go into X account, and then you have your bill account, your bills, and all those good things, and then you maybe have your emergency fund account, and then y'all may give each other an allowance or something like that. You're gonna start to see that first account over here is gonna start to grow even more because you're gonna discipline yourself to live on that budgeted amount. I'm gonna go back to the Chipotle story real quick. The Chipotle story was that I took my son to Chipotle. He's 13. His meal was $17 and some change. Now, on the way to Chipotle, I asked him to look up the kids' meal. He is 13, but he's past 12. Anyway, it was lunch and we were still gonna eat dinner. So I said, look up the kids' meal. So I used this as a learning tool for him. He only had the bowl, but because they charge extra for guacamole and queso, his meal was $17. But I had him take off the queso, so it was 15. Okay, petty Betty. But the point is, the kids' meal was $5. So we got in the car and I said, you know, son, you could have had 3 visits to Chipotle on the kids' meal. But now you got one and done. So us kind of thinking, creating ways to still be able to do the things we want to do, but within our means. He didn't even eat the whole $15 meal. So every time I have an opportunity to teach them something, I want to teach them, but I'm also like re-preaching it to myself. So when I'm on here with you guys, it gives me a chance to re-preach it to myself. Anybody know how much of our income, 30% goes to our house, but how much should go to our savings?
What I do every month is I pay my tithes, pay my 10% tithes, and I put 10% in my savings.
10% of your savings.
And I use my credit card to pay for everything. And I pay my credit card in full at the end of the month. And
Yes,
if I know that I'm not gonna have the money to pay my credit card in full, then I don't buy that item until maybe next month, when I know that I can pay it in full.
right. So then you've allocated a certain amount that can go on your credit card every month. And then
Yes.
you try to stick within that. That's excellent. So becomes a thing you do as you mature in your finances as well. So if you talk to financial planners and financial counselors, they will advise that you save 20% for your future. That's your investments, your savings, life insurance. 20% for your future. So you have to decide out of that what goes to my emergency fund, what goes to my 401k, what goes to my life insurance planning. So 20% of your gross income should go towards your future. And that would be a goal. So right now, if you're not allocating anything towards your future, and some of you have things like guaranteed retirement. I know we have some educators. So you have that guaranteed retirement. We have some veterans, they have some retirements. So everyone's situation is going to be different, and that number could be different for you. So just in general though, if this was someone without any type of public retirement plans or federal retirement plans, 20% is about what it takes to get to a successful retirement goal and have enough additional to live on in addition to your Social Security income. So automating your savings, and we just had a couple of people share that with us. Reduce unnecessary expenses, cutting back, taking the meat out the freezer like we used to do, finding cheaper alternatives to things that are necessary, exploring side jobs and freelance work, using those bonuses, tax refunds, and gifts towards your savings. So that's another thing. If you are on some type of job where, let's say you got a extra paycheck, right? If you get 26. So if you're living off of mainly 2 checks a month, but then there's 2 months that you get that extra check, if you find a way to maybe put that away in your savings or put that away in your emergency fund, or maybe it's a vacation that you and your family have not had a chance to go on. So thinking of creative ways to put up other money if you aren't able to pick up a part-time job for a few months. Utilizing your 401k plan. So if you have access to a 401k plan, if it's only 1% or 2% that you can put, go ahead and start your 401k plan to start working towards your final retirement goals. Okay, smart saving strategies. So these are some different accounts that are at your traditional banks and some of the online banks having high yield savings, CDs. CDs are paying pretty well right now, much better than they used to be. Some of you have access to health savings accounts to help you use those untaxed dollars for your co-pays and things of that sort. And then just budgeting for saving. And if you feel like you're at a place where you need to seek financial guidance, have a financial planner, you don't have to be wealthy to have a financial planner or have someone sit down with you and look at your budget. I did financial planning for 5 years. And so saving and having something in your future is very close to my heart, because a lot of us don't come from generations of wealth that's been passed down to us, and we may be the first generation to leave something to our children or to even have a hope to do that. So it's important that we use the resources the Lord has blessed us with, to further his kingdom, but to also leave an inheritance for our kiddos. So treat that savings as a bill, like do it now. And then I also have times where people have savings, but they have quite a bit of debt. So if you have a bunch of debt and you have savings, start using some of that to get ready to buy your house. There are down payment programs and stuff that we can use to help you with down payment and closing costs and things like that. So always, if you have some extra money and like, I really need to pay this bill down so I can get my credit up, that might be the best use of that money. So you always can reach out so we can help you make the best decision possible. Since we're not tied to your situation, we can try to give you the best advice that we know at the time. Of course, things always change. Putting it all together. So your budgeting, your credit, and your savings, these are all things that are going to help you all to become successful homeowners, but not become, but remain. So you don't just want to become a homeowner, you want to remain a homeowner. You want that home ownership to provide not just provide more choices for your family. So even if you got to, let's say me and my husband are one day we're going to retire, and then one day the 13-year-old will be grown and the 19-year-old will be married and all these things. And we might want to go live in somewhere else for 6 months. So maybe we rent our house out for 6 months and we go live in another state, for 6 months, or in another country. I don't know. But having a home of your own, it gives you options. It gives you a possible future rental income. It gives you peace of mind. It gives you the ability to forecast what your payment will be for a long period of time. And then you can do whatever you want to it. You can change the door out. You can paint the wall. You can landscape. You can plant that vegetable garden that you wanted to have. So I wanted to talk to you guys about a couple of documents. They're listed here. You can read over them. But if you're looking to purchase a home, having proof of your income is important. Sharing your bank account statement or investment statement. So a lot of people are hesitant to share all of their assets. And that's unfortunate, but because people think you're going to try to use all their money when they buy a house. But knowing what you have available is key. We had a file, I don't know if my processor is still on here. Kim, you still on here?
She is not.
Okay, so Kim is hard at work. So we had a file just recently that the family is building their dream home. So this dream home was $50,000 over what they were approved for. And then between them starting to build their home and completing the build of their home, 2 of their debts reported late. It dropped their credit score 100 points. So instead of their credit score being 720, it's 620. So for their file to go through, guess what made it go through? Their assets. That's what made it go through. So the amount of money they had in their 401k or whatever, that helped to reduce the risk. So it wasn't that we used the money, we just showed that they had some cushion money for the whatever might happen. So it helps to reduce the risk. And that's why, like, working with us and working with our group here, our heart is in everything that we do, and we want you to be successful. So I want to give you all a second to go ahead and ask any questions that you might have as it pertains to homeownership, saving, budgeting, and definitely leave in the comments if you would like a copy of the budget sheet that we have.
The question that I have is there like a website to where we could find different, I'm not sure the correct term, but like loans or different programs that we might qualify for? Or is that something that y'all strictly do?
Yes, ma'am. So we would do that for you because each area is going to be different. And the program that we had lined out for you is for your state. And we can revisit that, Ms. Ramos, when we get together to get your updated items. Do you have any other questions, sweetie?
Oh, no, ma'am, that's all. Thank you. I forgot. I didn't realize I went back on mute.
No, it's a great question though, because a lot of times when you Google things or you look them up on the internet, they are like landing pages. I don't know if we have any computer people on here, because I might.
Yes.
So they are landing pages to get you to someone like me or whomever else. So it might just be a creative landing page that's really not gonna serve what you're looking for.
Okay, I understand that.
so-
Thank you.
Yes, it's
Yeah.
just so much out there right now.
And
And
sometimes those, I'm sorry to make it, those pages, like, they give you like general information, but until someone like Tomekia looks at your case, you know, they just give you general information to kind of grab you, but each situation is different, and so that's why they customize a plan for your situation.
Okay. Oh, one more question, sorry.
that's okay.
Uh,
Take your time.
I know someone had mentioned earlier paying off their entire credit card at the end of the month. Is there ever a time or a situation to where just paying multiple times helps your credit faster?
Paying it multiple times a month.
Yes, ma'am.
So yeah, that is one of the tricks that you can do. You can pay your credit card twice a month. And so that helps to cut down on the interest that you pay. But the other good thing about paying it twice a month is it helps you make sure you didn't miss a payment.
Okay.
So I do advise that at times. And remember how we talked about maturity? So Ms. Jermance that spoke about that, she's a veteran homeowner, right? So she's owned the house for probably over 40 years.
Okay.
And her credit and things of that sort, and her ability to trust her finances, she can do that. So
Okay.
I have a lot of clients that said, I put all my bills on my card and then I pay it off. I'm like, you're not there yet. Don't do that. Don't do that. Because
Okay.
for one thing, you go to the store and let's say you have children and this, that, and the other. You're not looking on your credit card to see how much your remaining is. Like you just out there doing what you gotta do because life is moving and you living
Right.
like you're taking care of your family. So you're not really paying attention to it. But if you set aside it like with cash envelopes or you keep up with your little notebook that you take to the store, you can have a little 3-ring notebook that you take. And you can talk to your kids about this. That's why I say it's so important. And why I told my son, like he just think $15 is $15. No, son,
Right.
3 meals you could have had. Oh, but mama, you didn't say that, but I know in his head what he's thinking. But I want him to understand that you're going to be responsible for this one day. And that $15 could very well have been a whole week of groceries if you went and got you some ground beef and some noodles and some spaghetti sauce and some light bread.
That part.
I'm just telling you. So no matter how high you get to stay where you at, you need to have some humble practices in your life. And then you have to teach your kids how to do that too. So therefore, when they get grown, they don't just expect things to come to them. They're able to, oh, that's why mama told me no. You know what? I sit back right now today and I'm like, well, shoot, they didn't never buy me a new bike. I'm serious. I'm dead serious. I didn't ever get a brand new instrument. Never. It was always used. I was one kid by myself. I'm like, I know they could have bought it. And they could have bought it, but it wasn't a good use of their money.
At
So
the end of my cycle for my credit card, I know what my next payment is going to be. So I programmed the system to make that payment for me a day before the day is due.
mhm,
That's why I'm never late,
yeah, yeah,
because I know I won't remember.
yeah.
But when I get that invoice, I go ahead and program the system to pay one day ahead.
Yes, ma'am. And therefore, you're not paying interest on it.
I never pay interest.
Not paying interest. And that's the other thing about it, Miss Ramos. So you're gonna get there. And like no matter when you get in your house or whatever, we'll always be here to help you. Because things are gonna get to be more like you'll have a couple of more bills. You have an alarm system, you have the lawn person, and you have a few more things that you have to take care of. So we always here to help you to share for me, we've owned a home over 20-something years, but I grew up with parents who owned a home. And I know that my case is not the same. And a lot of other people's cases are not the same, but I'm willing to share with you every good thing I did, but also every mistake I made, so you don't make the same mistakes.
Awesome. Appreciate that. Thank you.
Absolutely. Miss Larissa, did you want to share something, honey?
Something I like to do that I'm sure was already mentioned, but I get paid bi-weekly, so at the first paycheck of the month, I like to pay the minimum payment on my credit card. And then when I get paid again, I just like to make an extra payment because I want to actually pay down my balance, not just the minimum. Because if you just go by the minimum, like they said, you're going to end up paying interest, and It's just going to take very much longer for it to actually go down. And then when I get paid, because I'm trying to learn how to save better myself and try to live, like Tomekia said, more humbly. And it's really hard. But, once you kind of make that adjustment, you kind of look back and realize, why did I even live that way before? But something I like to do when I get paid, before I even think to pay any of my bills, the first thing I do is put money in my savings, because what I learned is I'm investing in myself first. I'm paying my bill first, which is putting into my savings. And now I'm actually building a true savings, because you try to save and you end up taking out of it. But once you get paid, if you start making that a habit, it becomes more easier and easier, and you start to look back and you're actually starting to have a pretty sizable savings for in case anything may happen, in your life.
So good. Great tips. I have one final thing I want to leave you guys with for a tip, and that's when you get a pay raise or a promotion on your job, or you just get some extra money somehow, or someone thought of you for a birthday or whatnot. Take half of that money for yourself now, and then take the other half of that money and put it in your savings. So if you get a pay raise on an hourly basis, or they start allowing you to work a little bit extra, take half of that money to put towards your living today, how you live and better your living situation today, and the other half to apply toward your savings or your 401k to increase those things. So every time you get a raise, put half to your future, half to today. Did you all get anything out of today? I hope so. If it wasn't but one thing,
Yes, ma'am.
Yes, it was great. And
excellent.
Miss
Yes,
Durst,
ma'am.
thanks for sharing your information as well.
Yes, yes.
I
Absolutely.
did have one quick question.
Yes, ma'am.
One of our clients that's on here, she texted me while we were on the Zoom. She got her student loan. She got a payment plan now, and
Yes.
she received a notification that her balance had increased. Is that gonna affect her really
Her
bad?
balance on her student loan?
Yeah, and I don't know if it said it increased by like $200.
Yeah.
$293.
With a student loan, you have to be careful with that, because sometimes when you're not paying, they're still charging interest.
Oh, okay.
That's one of those things that you can't, it's almost like just an uphill battle.
Mhm.
Of course, they have the student loan forgiveness programs that were out, and some people were able to take advantage of those. Maybe they'll come back around, but for most clients, if they have a high student loan balance and they want to use a lower monthly payment, if they're getting an FHA loan, which most first-time buyers are, they do need to get a small income-driven payment. So the fact that your client was able to do that is a success.
Okay.
What they want to do now is just look for that start date and make sure they're routinely paying it until we get into the house. Once we get into the house, they can call and go back to their zero payment if they choose to.
Yeah, that's what I told her.
But yeah, we have to kind of play within the guidelines to meet what the loan requirements are to help them get into their home. But yeah, the interest, so let's say you owe 60,000 or whatever the number is, and interest on that could very well be $200.
Oh, okay.
Totally. But if it doesn't look right, they need to make that phone call. So it's never a bad thing to inquire, because you're getting more knowledge when you call and ask. Especially,
Right, to see why it increased.
yeah, if you hadn't seen it before, is it a years of interest there, or is that going to be every month? Like, find out exactly what that 200 is made of.
Okay.
That's good. If we have any fathers on today, I would like to wish you all a happy Father's Day. And for all the mothers that are represented who are holding down the father's position, happy Mother/Father's Day to you all. Let's see, we got Juneteenth coming up next week. So I know a lot of people are off the whole new holiday. So praise the Lord for that. And just praise the Lord for diversity. And just embracing all cultures. Here in San Antonio, we have so many different people. And home ownership, it's available for anyone who wants it. So it's gonna be us individually who stop ourselves. So try yourself, like write down those couple of things you're afraid.
That's it.
Miss Beeler, you said a couple of things you were a little nervous of. You know, write those things down, and then on the flip side, find you a scripture to overcome that. So when you feel that way, you
Amen.
read that scripture. You know, God has not given me the spirit of fear, right? So you
That's right.
write that scripture down anytime something comes your way. The devil doesn't want to see.
Yes, ma'am.
So we are here to cheer you on. Everyone can do it. Y'all can do it.
Yes, ma'am.
Yeah.
And it's
And
still
before you go,
national.
Tomekia, I have a quick question.
Yes,
So go
ma'am.
ahead, because it seemed like someone was speaking as well.
No, go
Oh, I
ahead.
was just gonna say to the future home buyers, it's still National Home Ownership Month. So you're doing good to be getting this good information so you can be a homeowner soon.
Exactly. Came right on time. I do bank with Navy Federal, and I can check my FICO score through them. Is that going to be something that's going to be accurate? And is that the only one that if I was purchasing a home that they would use, or do I need to look for an additional FICO score?
So if it's been a while that we've done a soft pull for you, I would say let us do a soft pull for you. Just reach
Okay.
out to us and we'll do a new soft pull for you. But even on
Yes, ma'am.
the bank website, it's going to be a different FICO model that you're getting.
Okay.
So it's going to be
Yes,
probably
ma'am.
a version of TransUnion, and it's not going to be your actual lending score.
Okay. Okay, I can do that. I will complete that application and then we can move forward from there. But thank you so much for your time. I appreciate everything.
I'm so proud of everybody on here. Y'all just make me smile and make me want to just keep going every day, because it's not easy every day, but God is so good. And
Yes, ma'am.
I way to keep me going after 20-something years. So almost 20 years. I'm adding on, but almost
Hey, Tomekia.
grateful. Hello, sir. How are you?
How you doing?
Congratulations on your new home.
I'm sorry.
Yes.
Thank
Oh,
you. Thank you.
congratulations.
Congratulations.
Thank you. I just want to tell everybody on the
Congrats.
line that Tomekia Hunt and her team did an amazing job for my wife and I.
Oh,
in
yes.
home, and I think we're 3 weeks in, and I would say that we are truly blessed for
Mhm.
their work ethic and Tomekia just having a level of sticking to itness and making sure that we was able to get the home the way it all worked out. I'm so excited about the purchase, and she is definitely someone to keep you inspired and motivated and seeing it all the way through. So thank you so much, Tomekia, for all that you have done for us. We're greatly appreciative of your team. Your team is amazing. Thank you.
Thank you for your
Thank you, for sure.
Yes.
awesome. So
And
Yes.
I second that. She is very awesome. Her and her team, as a real estate professional, she has motivated me. And she's just had my back, with my clients, and I really, really appreciate that. And I'm not just saying that this is real talk.
yeah, you can't pull no punches with Miss Phaedra. She don't befriend everybody. So yeah, so I am thankful. I am thankful to each and every one of you. If y'all think of anyone who could benefit from being a part of our class, please text us their information. We're always looking to help as many people as possible. And we bid you guys a blessed afternoon. Have a good
Thank
day,
you,
You
y'all.
too. Thank you so
Thank you
much.
so
Have a
much.
great day.
Thanks,
You too.
everybody.
Mhm.